Millions of dollars worth of trading positions are at the point of getting liquidated, and we are still fighting at the value area high for Bitcoin. That and more in today's video. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share the video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram. Those links are also in the description. Without further ado, let's start diving in. In Friday's video, we talked about this crucial area here at 29,900 for BTC, which is the value area high of this macro range. Finding acceptance within the range will probably mean that we are gonna go down all the way to the bottom at approximately 26,000. And I said, if we break the value area high with conviction, I am entering a short no matter what happens in the weekend. But this green candle that you can see right here, that was Friday's trading candle, and that closed exactly to the dang dollar at the value area high. For me, that was not a clear sign to enter a long or a short. And guess what? On Saturday we went a little bit down, and on Sunday we went up again. So if we then zoom out and we look at the weekly candle, then we can even see that the weekly candle closed above the value area high. So for me, no clear trigger yet to go long, to go short, and you can see that again now we are trying to go lower. This area right here where we are in right now in the last let's say week or maybe a bit week and a half, that's very choppy price action. At the end of the day, just a few tenths of a percent higher, lower. These areas are made and designed for retail traders to trap them, to capture as much liquidity as they can, to eventually then to choose a direction. Because with every time we're breaking higher or lower, retail traders are thinking, we're breaking, I gotta go short, hey, we're back above, I need to go back long again, short long, short long, short long, and eventually they're just getting completely chopped up, and yeah, they see their trading account being sliced in pieces. So what could you do right now? Well, the best thing is to just wait it out. Don't be aggressive to enter now a trade. Let's first see the market's hand. Let's see what they want, if you want to go higher or lower. Do I have a few trades for you? Yes, I do. If I'm just looking at these lows right here, then they're actually very ugly lows, because we have a low and then slightly higher low, slightly higher. You do not want to see this, because this is also the buildup of liquidity. People are longing, they are putting their stop loss underneath these wicks, and therefore you're building up liquidity, and it has a reason to go to the downside. But that right now is pretty deep to take liquidity to the downside and then to go higher. Yes, that is true, but we also have just underneath the 50-day EMA, and the 50-day EMA is seen as a indicator to really signal, are we in a bull or bear market, or support and resistance. And as you can see here, it was a very clear support, then we lost it, and it was a very clear resistance, we blasted through, and now we have not really tested yet as a support. With that being said, we also on Wednesday have FOMC. That means that the Central Bank of the United States will most likely rise the interest rates again with 0.25%. That's almost given, but usually these days are very volatile. So what I could imagine, and what I'm probably gonna trade, is if we are going to dump down today, tomorrow on Wednesday, to test that 50-day EMA, take out the liquidity underneath these bad lows, and then right away bounce up. To then still be bullish, we need to close the daily level at or above that value area high again. If we do not, then we are going down, maybe going slightly higher. Let's say we are ending here underneath all of these wicks. Then that is still a pretty bearish sign, because yeah, then you're so close to the 50-day EMA. You want to see a strong bounce, you just want to see buyers stepping in, and then for us to go higher, and then eventually I am reaching for higher. Let's say that that is not happening, and we are going higher first, so that value area high for now is holding as support, and we are going higher, but you are convinced that in the macro we are going down, and you're looking for a short position. What could be a nice short position in this area? Well, also something that I've seen as a little bit weird on the candles is that we made ourselves a high right here, and I'm going to mark it out so that you exactly can see what I mean. We have a high, and then we have a high that was just slightly lower, and then we had the one from last weekend which was slightly lower. These are also very bad highs. You don't want to see that. So if we are are going higher from here, or maybe we are first testing the 50-day EMA and then go higher, this would be at least a very nice take profit moment. But also a lot of people will probably be waiting for the golden pocket. But let's say we are not reaching the golden pocket and we are just taking these highs, taking these highs, go to the 0.5 and then eventually retrace down, losing the value area high. Then we can say, okay, this was the yearly high here at approximately 32,000, and then this was our retrace, taking liquidity and then to go lower. Those are right now the scenarios that I'm looking at and what I'm most interested in trading. If we just break to the 0.5 and go to the golden pocket and eventually return there, that is also completely fine. But I just want you to be open to the idea that we might not get to your preferred level or to see an S&P. If we are going lower, please already take profit at the value area high, because of course we might bounce there. And also for the long, it is exactly the same. This one is a little bit trickier. So if you want to put in a long trade, then you should take it after we bounce from that 50-day EMA and really wait maybe for a 15-minute candle close. That will be better. Take profit at that value area high right here, and then you can aim really for these highs to take the liquidity at 30,500 or maybe the golden pocket if you think that we are going there. One other thing that I have been seeing so far in the indicators, which actually is not all too pretty. If I'm zooming out here on the weekly, then you can see that market Cipher B is trying to print a red dot here on the indicator. And if that happens, it will give us a bearish divergence. Momentum wave is going lower. As you can see, VWAP is also already going lower, and price made a higher high. So we do have a valid bearish divergence. Now that doesn't mean that if this red dot is confirmed at the end of the week, we're right away crashing down. We can still maybe for 1 week go higher and eventually the week after to go lower again. So please don't stare on that and say, okay, now we have that red dot, we are going lower. We might still zigzag a little bit to maybe grab some more liquidity and then to go lower. But if this is eventually confirmed, and usually on such a high time frame like the weekly, it will play out. And the same we have also seen with the bullish divergence here at the bottom. And then you can see the price was already making lower lows and the indicator was making higher lows, and therefore it took a while, because mind you, these are weekly candles, so it took a little bit and eventually we blasted off, and then we just had weeks and weeks of a tremendous upside. So this could be the same. If that red dot is confirmed, might take a little bit and eventually we are rolling over and you can see that dump down. Of course, it can also happen that we are just right away straight dumping down, but I want you to be open to all scenarios. So don't stare blind on the idea that we need to go higher and we are in a bull market. The indicators are saying something else, and you can still day trade from the 50-day EMA up to the liquidity on the top that I just showed you, and you can still maybe trade from the liquidity down, from liquidity on these tops to the downside. But we also need to keep in mind what kind of environment are we in, and is it most likely for us that to go higher in the next couple of weeks or months, or to go lower, and therefore do we need to favor shorts or longs. Again, FOMC on Wednesday, this is going to be a very volatile event, so be careful. We are going to grab liquidity one way or the other, from the tops, from the bottoms, or even from both sides. Don't get caught up, don't get chopped up here in this price action right now. If you're not in a trade like me, just wait it out until your preferred setup is hit, and don't try to constantly long or short here at that value area high, because that is how you're going to lose your money. And once that big slingshot, that big trade is coming, you don't have any money anymore because you just got caught up in all that choppy price action. So just wait it out if you're not in a long or short yet. If you are in the long and short, don't forget to take some profit, because we don't know exactly how this is going to play out. But I am at least prepared for both scenarios. I have my alerts set, I know exactly what I'm looking at, or what I'm looking for, and that is then eventually what I will trade. I will trade the reaction, not based on feelings or what I think is going to happen. That is important. Alright guys, I hope you liked the update. If you do, then please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share the video with your friends if you think this is useful. Also feel free to follow me on Twitter and Instagram. Those links are also in the description. See you guys very soon again in the next one. Bye bye.